Hello everyone, it is Sterling here from Day Trading Forex Live. This is a video of a webinar that I just did with Investors Underground. So I just recorded a couple-minute intro video with a really important point before we get to the webinar. What I'm going to show you guys is something that I generally don't do because I don't like to come across like a get-rich-quick type person, because that's so far against everything I teach. But what I wanted to do for you guys is I wanted to fund an account with a small amount of money and show you what is possible in a 30-day, just a simple 30-day period of time. And the reason I wanted to do that is because, people can't really relate to a six-figure account. Most people don't have it. You can't really relate to it. So when you see it, you see, for example, Nate posting $20,000, $30,000, $40,000 gains or larger on a daily basis sometimes, it can be hard to relate to that. So what I wanted to show you is a small account and see what is possible in a 1 month period of time strictly using Investors Underground setups. I did not use any of the setups that I teach. So you guys know I teach market manipulation and stop hunting and that type of setup. I used purely Investors Underground setups. I did not take any type of stop run based setup in this. So again, it is pure Investors Underground. Let's go to that account now. Now I'm going to block out my account as I log into this. And as you can see, we have $331 in the account right now. Overnight buying power and day trading buying power are the leverage buying power. I keep this account open for charting, and generally I keep between $200 and $500 in here because they pull out $100 a month for charting. So I keep it active with a small amount of money. And that's why I thought this would be a perfect account to test that for you guys and show you what's possible. So what I did, and you can see my account name up here, Sterling Sir. I've blocked out my account number, but anyways, again, what I was saying is what I did was I put $3,000 in an account, an amount I thought people could relate to, and I simply picked a date, started trading for the next 30 days. So let's go to that. Coming up here to report, we go over to P&L summary. So we go over here to the P&L. It's the current day, just shows you the current day and the day prior. You can see there's no trading on the account. Again, just an account I use for charting. But let's go back to that 30-day test period. And what it was is it was a couple months back, because I knew I was going to be doing this webinar coming up. So starting on the 11th of August, that's when I finally funded the account, going from the 11th of August to the 11th of September. So I picked a 30-day period, wired the money in. Here's the results. Hit go. Here's what we got. Now, I'm going to show you everything here in a second, but I'm going to zoom down and I'm going to drag this out. There we go. Okay, so I'm going to go into the bottom left-hand side because this is the really important part. It shows the actual day breakdown, 8/10, 8/11, 8/12, 8/13, 14, 17, all the days. You can see that we started out with a balance right here of $32.69. So the day prior was $251. I had wired in right around $3,000. I wired in a little over because they take out some for wire fee. So anyways, basically it gave me a starting balance of $32.69 and 36 cents. Over the course of the next 30 days of trading, the final account value was $8,837. This is such an important point. It's an important point because hopefully it shows you guys what is possible. Now, I will say that results are not typical. These results are not typical. Every month is going to be different. Anybody listening to me right now knows that. You'll never have exact results from month to month. But there was no, really intense super stretch of just amazing trading. And there was even some big losses in there. I mean, nothing huge, but there was definitely losses in there. The fact is, if you stick to the setups that he teaches, if you stick to the scan that he does every single night of the stocks to trade, and if you're in the room, or you don't necessarily have to be, I highly recommend it though, because that's a main part of the service. There's so much guidance, there's so much direction, the setups are so simple that learning to take those setups is really a fairly fast process. I've been a member of Investors Underground for a year and a half. I have, for the last 7 or 8 years, been purely a Forex trader. So a lot of this, for me, is fairly new. A year and a half is really fairly new. Quite frankly, I don't think these results are too far outside of the norm. There's plenty of members inside the Investors Underground room that are doing results like this with this size account, much larger account, somewhere in between. If we go up just to show you the rest of these numbers, what it all means, basically Realized profit and loss was 9,000. There was actually, so the account value would have been 12,000 if you didn't add in commission as well as ECN fees. And here's another 350 taken out. So the actual profit was much larger than that, but additional fees, equity trading can be somewhat expensive, and additional fees brought it down roughly $3,000, a little over $3,000. Still, in all, if you add that number up, you take the final number of 8,837 and you divide that by the starting balance of 3,269, that gives you 2.7, roughly a 270% gain. Are you going to do that every month? No. Are you going to do that when your account's at $50,000? No, you're going to use a smaller leverage, especially as you approach a six-figure number. What this should show you is that the ability to start with a small account is there. The ability to grow a small account is there. And there was nothing special done here. I believe anybody can do it. And this is just a great example of it. All right, guys, let's get into the webinar, show you a few of those setups that I used here to produce this type of result.
I guess I'll kick things off. This is me, Cam. I've been, that's a horrible photo of me, actually. I don't take photos regularly. I've got like 3 photos on my phone, and my parents were visiting and they wanted a photo for my relatives, and I've been trading all that morning. And I was actually sweating a couple of stocks, and my dad came up into my office and was like, hey, I need a picture for the relatives. And I was like, okay, sure. And he's like, no, smile. And I was obviously probably grimacing a couple of positions. So that's that's the story behind that. But I've been trading equities full-time for 5 years. And I've been a member of the Investors Underground community for 5 years. And I've been moderating within the community for 3 years. So I basically joined up as a normal subscriber. I moved through the ranks of, I learned basically everything I know about trading now from the community, from the moderators who were moderating it at that time. And now I basically help facilitate the sharing of information. So I don't know if any of you guys have realized, but I've got a little bit of an Australian accent. I trade half the year from Sydney in Australia, and I trade the other half of the year from the Bahamas. I've got a place in Nassau, and basically that's because they've got a much better time zone, closer to the Eastern time zone, I guess. In Australia, if we want to trade the US markets, we have to trade all the way through the night. So I had done that for around 3 years, and I was interested in living a normal kind of time zone life. So yeah, I spent half the year here. I'm back here in Sydney at the moment, and then the other half of the year in the Bahamas. So I try and spend the summers in each place.
Got any? I'm gonna jump on. You got any pictures of your place in the Bahamas to make us all jealous? Who are probably.
Well, I said I was bad with pictures. Let me see what I got.
I'm in Michigan right now, so we're about to get some snow. So.
Yeah, I've got one here. I don't know if it's any good way to. So that is living area. Well, that's I guess dining. Let's see if this is. That's kind of living, but it doesn't really give you a good feeling of what it's like out there. Let me see if I got something on the balcony. One moment.
Oh, I'm sidetracking you now. I didn't mean to sidetrack you.
No, it's all good. Oh, there we go. Yeah, that's sunset, judging by the drink, I guess. But yes, so half the year in the Bahamas. That's all good. I guess my kind of life is late nights and early mornings, depending on where I'm at. So I guess going back 5 years when I was starting out, I was avid internet browser. So I would jump on, and I knew I was looking for a way of doing things differently than the kind of 9-to-5 grind. And I guess I was using the internet to try and discover that. And I would go on and search for different ways or different entrepreneurial kind of ideas to be able to quit my job and make money from something that isn't exchanging time for money, right? I'd go on YouTube and go on people's blogs and all that kind of stuff, and I was sifting through hours and hours of information. And you'd watch a 3-hour video on Fibonacci retracements or moving average crosses or whatever it is, and at the end of it, you're kind of scratching your head thinking, who the hell am I learning this from, right? And I think a lot of the time it's some guy in his parents' basement, being a armchair quarterback, trying to teach people how to trade stocks when they don't really do it themselves. That became a bit of a problem, I guess, because the internet's like an information overload. And I started to question whether the information that I was spending all my time watching was even valuable. So I said, okay, cool. Well, I'm going to have to, go online, read some reviews of some, I guess, paid services and sign up for a few and see which ones kind of fit. So that was actually when I met Sterling. I signed up for day trading Forex Live. I signed up for Investors Underground and a couple of other services. One of them traded penny stocks, and one of them was small caps or whatever. And I spent a few months kind of learning bits and pieces from each of them, and seeing which ones best fit my personality. There were many aspects of the day trading Forex live room that I really enjoyed. I really enjoyed, I guess, the psychology behind why the moves happen. I really liked Sterling's approach to risk and being very methodical in his trades. There was one thing that I guess drew me towards Investors Underground was that I was addicted to the action. I loved fast-paced moving stocks, and there was just a lot of choice in the world of equities. There are 7,000 listed tickers. There's probably 20,000 or more if you count all the OTCs and the bulletin boards and all those kind of stocks, but we don't really trade them. We're trading NASDAQ, NYSE, kind of stocks. 7,000 tickers, they represent companies basically, but there's only really, I don't know, maybe 2,000 or 1,500 to 2,000 that would be really worth trading. I'll get into that a little bit more when I'm talking about different setups and what we trade and why we trade it. But when you've got 2,000 things to choose from, there's always something moving. That's not necessarily to say that you've always got to be trading, but you've always got the choice to be trading something. And the other thing that I guess really stood out to me about trading equities was that I loved learning and experiencing the pure human emotions of fear and greed, and I'd learn more and more about what drove people and what influenced their decisions. And if you are outside of a trade looking in, it's very easy to see where people's flaws are. Basically, that's what interested me in momentum, or MOMO. So learning about where are people's pain points, where are those boundaries, and what happens when they get there. So what is MOMO? MOMO is basically, momentum trading is a form of day trading. Some people take very short-term swings. I'm talking maybe 1 to 2 overnight plays, but 90 to 95% of MOMO traders are intraday traders. So how do you know if a stock is a MOMO stock? It is trading with abnormal volume to the upside, right? So when I say to the upside, I mean abnormally large amounts of volume. So what this means is that there are more people trading it than people normally trading it. If we look at a stock like, Apple, AAPL, every day it's traded around the same amount of shares, and while there might be opportunities, both long and short, that isn't entirely what we're focusing on. What we're focusing on are stocks that, are trading maybe 50,000 shares a day for, every day this year. Then suddenly there's some kind of catalyst and they start to trade 100, 200, 500,000 shares in the first 10 or 15 minutes. And we know, hey, there are a lot of people watching this. Now, when there are lots of eyes, or lots of volume, lots of eyes, there's usually a bigger range and more volatility. And with more volatility comes more opportunities, right? Both long and short. So more volatility, lots of eyes, and kind of importantly, lots of opinions. So you're taking advantage of other people's emotional button clicking, basically, up or down. So as you guys probably all know, you can long stocks, you can short them. So it doesn't matter which way they're going. In fact, often we play stocks both up and down, and we bring very little bias to the table. So while there are a lot of people out there who are like, hey, it's a great company, they had great earnings, and the stock's going down, that kind of trader might be buying because they're thinking, hey, I'll hold it for the next 6 months or a year, or I'll tuck it away for 10 years and I can't lose money. Those kind of traders make me scratch my head a little. I've seen too much go on in the markets where you see great companies get crushed, you see horrible companies go from $1 to $20. We try and read what happened previously on the chart to let us know what's going to happen. So we don't bring a lot of bias. I'm happy to long a horrible company. I'm happy to short a great company. In terms of an investor perspective, I'm in this trade for maybe, my time frame is maybe 5 minutes to 2 hours. That's the kind of time frame that I'm really comfortable with. Other traders in the Investors Underground community will trade on a different time frame, and I'll get into those guys in a bit. But again, we don't really care why the stock's moving. It's sometimes interesting to know the catalyst to kind of determine how powerful it might be, but we really let the chart let us know or give us confirmation that what the catalyst was even meaningful, basically. So what do we care about? I really feel that, predicting the direction of a stock is kind of like predicting the weather, right? I mean, I'm 30 years old, so I've been on this planet for 30 years, and you get a feeling for when it's maybe about to rain, for example. You might feel some moisture in the air. You might feel a cool breeze come through and the clouds come over. Because I've seen that before, and in history, when I've seen those set of kind of circumstances, there was something that happened afterwards, I can predict it and make plans accordingly. Let's say you're down at the beach and you feel like all of those conditions are meeting for it being about to rain, right? And it was a really sunny day previously. You might quickly leave and jump in your car and get out of there, beat the traffic. And then when it starts, when the first drop hits, everyone else gets in their car and, is stuck in a jam, right? And I really find that trading is the same way. You really need to use your intuition to be able to get a feeling for what the herd is about to do, right? And if you can be one of the first movers, right, and then the herd comes in and follows, you can make money off that consistently. So that's kind of how I describe the strategy, and obviously we've got a bunch of parameters around what we do in terms of risk, in terms of trade plans, different setups. I'm going to talk to you about a couple of those, but basically that's the kind of idea of it, is being 2 steps in front, being 1 or 2 steps in front of the herd. So it's not easy. Emotions, especially when you're making or losing money, can run very high. I've been on the experiencing end of that, and I've been on the observing end of that. I've experienced it where, I've drawn down 5 figures in the morning, closed it out, switched off my computer and went back to bed. But, the exhilaration of the other side of that, is very rewarding when you do something that, works out perfectly to your plan and fulfills what your expectations were. Even, having traded for 5 years, and even Nate, who's the head trader of Investors Underground, he's been trading for over a decade. Everyone's susceptible to feeling emotions when you're right or wrong or making or losing money. It's part of being human. Basically, the idea is don't be controlled by the emotions. Let the emotions of other people present opportunities to you. Traders with no support network, 90% fail. So, it's a pretty common stat that you hear thrown around in the industry. 90% of traders fail, right? Approximately 10% of people make it. But I think a lot of people go in very underprepared. I think that's the problem. I think that people feel like, or they've heard a story about someone who does it really easily, or they've heard a story about, someone's uncle makes a bunch of money in stocks, or is a stockbroker, or whatever it is, right? And they think that they can come to the markets and just print money. It doesn't work like that. They think approximately 10% of people make it, but that's not really what we focus on. I mean, what we focus on is, what do the 1% of people do, and how can we teach that to people to bring them into the 10% who are making it? So what we do in Investors Underground is really focus on what the 1% are trading, why are they trading it, and how we can learn from it. And we're going to go into a couple of setups. I think not this slide, the next slide. So, at Investors Underground, we focus on studying the favorite setups of the 1%. We've got a couple of 10-hour courses that go over those favorite setups, video lessons, scans, chat rooms, sharing real-time information, but most importantly, no chin strokers. So no armchair quarterbacks, the people who are moderating or giving information about how they trade. It is very focused on things that are very actionable. It isn't theoretical. Sure, we've got the theory. Hey, this is why we're trading it. This is why it's moving, up or down, left or right, whatever it is. We go and put our money where our mouth is at the same time, and we're trading it, and often with a lot of size. So let's get into the setups. So this is what we call an ABCD setup. So this little graphic is taken from one of our training courses. Basically, the theory behind this setup, I mean, it's a long setup. So where the idea is buying low, selling high. And what I'm going to do is draw it out for you and chat to you about it. So let's say we want to get involved in a stock.
Real quick, can I jump in front of you, Cam, here for a second? A lot of you guys are Forex guys, and so the ABCD type pattern in the Forex market is so very different than the equity market. That's one of the things that I want to convey real quick as he gets into this, is that in the equity market there is true up and down, whereas in Forex, I'm trying to think of the best way to explain this. If you look at a Forex chart, technically you are going up, the chart is moving up or down, the price is moving up or down, but really a better representation of a Forex chart is if you tipped it sideways and it was just a tug of war back and forth. The point behind that is when the equity market, or excuse me, when the Forex market is going down, a pair is going down, one is weakening while one is strengthening. And you could say the exact same thing when a currency market or currency pair is going up, one is weakening, one is strengthening. So again, it's just a tug of war, and you don't have the same true dynamics of a falling market versus a rising market. Whereas in equities, when the equity is going down, nothing is gaining value. If somebody's short, they're gaining value, but it's a totally different dynamic. That's why certain setups like an ABCD pattern, they don't cross-correlate to the Forex market in the same fashion, but in the equity market, they are, as Cam will talk about, extremely good setup with the right equity, which I'll let him get into now.
Yeah, and I'll talk through what the psychology behind the moves are, because that's my favorite part of it anyway. So let's draw it out. So let's say, based on a daily chart, that out of the 2,000 stocks you're watching, you got 15 on watch. A handful of those 15 you want long, given the right risk-reward parameters, right? So let's say identifying the stocks is probably half the battle. Identifying the stocks that you want to trade, right? And I'll get into scanning in a moment. But basically, you identified this stock as something that you'd like to trade, or it's at least on radar or on someone else's radar. You don't want to just trade an ABCD pattern in Apple, for example, right? Because it's not going to be as high a probability setup than if there's a momentum stock that is primed on the daily based on the previous 3 days of action to have a high success ABCD pattern, right? So if you see this kind of pattern in a stock like Apple, it's not going to be as reliable as if you see this kind of pattern in a stock that is true momentum. I guess that kind of speaks a little bit as well to Sterling's point, in that this isn't a setup that is about trading. This isn't a setup that you can take to the Forex market and be like, hey, it's an ABCD setup, right? This is a setup that works for momentum equities, right? Momentum US equities that are liquid, right? So I'll go into liquidity in a moment, but basically a stock has a big move up, right? And I'm kind of looking at this thinking, this is really interesting, and I'm, maybe the previous day was trading kind of, like that, and then the stocks had a big move up, and I'm thinking, okay, cool, that's a pretty big move. It's going to be on people's radar. It's got momentum. It's got, higher than average volume, right? The volume here is maybe like this, right? So I've identified this as something I'd like to long, right? But I ain't going to buy it here because, I don't know what my downside risk is. I can't really buy it here, I can't buy it here, I can't buy it here. We don't know how high this is going to go, and sometimes we're going to miss that move. Basically, for this ABCD setup, what we're looking for is pullback. We still can't, buy it here because we still don't know how far we're going down, or if it is going to hold up, basically, or if it's going to retrace all its gains, right? So this stock kind of perks and does this, right? Now, let's think about the players in this. Let's think about who's trading it, right? You've got your longs who are interested. You've got longs who have chased it as well, all the way up. You've got shorts who are thinking, hey, this move is a huge move and stock doesn't deserve to be here, whether they think the company's crap, whether they think, $1 to $3 is too far, whether they're degenerate gamblers that just want the action, like they might think, hey, this is, for example, they might think, hey, this is a lower high, and they might be shorting it here thinking, hey, we're going down. So you've got some shorts involved probably here and here, given the size of this move. Then the stock does this, and this is when it becomes really interesting to us, because now as it perks up off this, we're able to enter a trade somewhere around here with a risk based on, the prior low. And what happens to the price action here is that anyone who shorted this move here thinking we're going down, they're going to be wrong. And we love it when traders are wrong, but we're not on the wrong side, right? So when traders are wrong, but that wrong isn't us, then it creates an opportunity. So this perk here is going to create some buying. Shorts who are wrong, potentially other ABCD kind of wedge breakout buyers. Essentially, we're entering in here and our risk is here. And we're not going to say, hey, it's going to go straight up to A, but what we are going to say is it's kind of showing its intention now. So this would be the first kind of idea. We're going to really have a look at how this trades around A to see if we've got enough momentum to push us to the upside, right? So straight away, we've got a almost 2 to 1. I mean, depending on what the chart setup actually looks like, this isn't a perfect scale or anything, but straight away 2 to 1 on your money, right? In terms of your risk. If you're going down here and stopping out, hey, the trade's a scratch, and if you're risking, let's say, $100 down to there, you stop out, you lose commissions and a little bit of spread, and the trade's going to cost you 100, 105, 110 bucks, right? Your first kind of target to see, hey, I'm going to have a look at this and see what's going on is around here. So that's at A. If you're seeing it, come up against some big, proper inventory, right? So some big, proper sellers, like real selling, maybe it'll stall here. Maybe it needs to do one of these ones. But the idea is once it goes through the high of day, it's going to show up on everyone else's stock scans. It'll come up on, the FinViz side as, something breaking out with abnormal volume. It'll come up on people's scanners. People scan for stocks that are breaking out because they think that's the time to buy it. We kind of see that as herd mentality. We see that as the people who are leaving the beach when the first raindrop hits and they're stuck in the traffic with everyone else. The way that we look at this is those people jumping in will fuel that next push. So B is the subsequent pullback. C is it perking off a couple of layers of support. And D, it hits everyone's stock scanners and that propels it, and we're selling into those people. Basically, this is the ABCD pattern. It's made, this is a very high probability setup when you're trading momentum, especially if you have volume confirmation as well.
Are you can I jump
So
in real quick,
selling,
Kim? Yep.
yeah,
One of the things that I think is this point is such a critical point, and that is the fact that this setup defines your risk for you. So if you're a member of Day Trading Forex Live, you know I constantly hammer on your reward versus your risk. Because as a trader, one thing that we have full control over is what trades we're going to enter. When you only enter trades that are set up for a reward to risk of 2 to 1 or better, you're putting yourself in a position where if you won 60% of those trades, let's just, I'll even say if you won 50% of those trades, you are extremely profitable. And that's obviously you should be looking for, especially in the equity market, you can maintain a much, much higher hit rate with this type of setup. But the fact is, it defines risk, and that's the main point behind this, is that you know your risk, you know it's to the low of B, that first retracement. Being able to define that risk, measure to the potential reward, you know, okay, this trade is a 3 to 1, or this trade's a 1.5 to 1, so you can be selective about which ones you're entering, and that's really the beauty of it, as it gives you that type of setup where, you don't have to win 70% of your trades. A 50-50 hit rate trader with this type of setup would do phenomenally well, and once you learn the setup, you should do much better than that as far as a percentage basis goes. So anyways, I just wanted to hammer that reward to risk factor home, because that is really critical with all these setups here.
yeah. And just to reiterate that, this is your first kind of target to really even consider locking in profits. So let's say that's 200 to 100 risk. When you hit this area here, I mean, we're talking 4 to 500 on your 100 risk, so that is really the ideal circumstance. Hey, you risk 100, you're looking for 4 to 500, and you've got a better than 50% hit rate or probability of these charts fulfilling what they have kind of spoken their intention to be. And often with these ABCD charts, they kind of do the ABCD pattern. They often do the ABCD pattern all day, right? So it's hit D, but now it's got to do something. So let's say it hits D, it pulls back, it perks. All the shorts again are saying, hey, well, if it was a short here, then it's definitely a short here, and then it does its thing again. And then you've got the A, the B, the C, and the D. I can show you a ton of examples. I've got some lined up for you actually after I close down this little painting, but I'll show you a ton of examples where not only does it do that ABCD in the morning, but it does it again throughout the day. Let's have a look at some charts. So this is the first chart I'm going to show you guys. These little tickers, basically this is the ticker. EYES represents what you're trading basically, right? So this is I got no idea what this company does, but we've traded it a bunch because it's had a lot of range. So this is one of Nate's trades. The ABCD setup that I'm going to be focusing on is the A, and then you can see the rest, right? But I'll speak to this little cluster of trades here. Basically, the first 15 minutes to half an hour of the morning can represent a lot of opportunity to people who are a little more experienced and are happy to trade a little more on intuition than chart action. So let's say a stock is spread out a little. You can see it upticking, and you think, hey, these are just market covers. You can provide liquidity into those circumstances and profit from it. So that is more of an advanced kind of thing. I probably don't have enough time to go into it today. You can see Nate bought it up here and then flipped it here, basically. Basically, we'll look at this as the ABCD setup. So the move, the prior close was here. So the initial move is this move from here to here. So it is from $8.60 to roughly $10.25. So it's a substantial move. What's that, like 15% or something like that, 20%. Then you've got a subsequent pullback, right? Now you notice that Nate didn't buy up any of that. He also didn't buy up any of this, but then we've got that perk. On the initial trade, we didn't get our easy breakout and high of day to D, right? So remember how I said, hey, see how it performs around the high of the day, right? And Nate didn't entirely like how it was performing around there, so he peeled it off. It's a profit. Maybe he was getting slightly over 1-to-1 on his risk. But then if you look at this as a bigger picture ABCD, right? So this is like the small picture ABCD, and it would have done that, right? But this is the bigger picture ABCD where B is here, which makes C here. There's a buy here, a buy again, and peeling it off into those high of day buyers that are buying it up kind of no matter what the price is. We always take profits into these big moves. So if you've got to kind of guess what Nate's average price was, this looks around 10.15. This looks around, I don't know, I'm going to say 10.60. So let's say maybe he's got a 10.30 average and he's locking it into 10.80, 11, 11.30, and 11.50. I'm going to say that he made a blended 10% on this trade. Back to the whole thought of no armchair quarterbacks, I'm going to see if I can pull up.
And just real quick, when he says 10%, he's talking about the actual move. He's not talking about Nate making 10% on his account. So just as a quick reference.
Right.
So I right. A lot of you, when I talk about percent as like in the videos I do, which a lot of you guys are gonna know those videos, I talk about percentage gain of the actual account. So that's why I didn't want you guys to get confused. So all right, jumping off.
Cool. Yeah, so it's a 10% move in the stock, right? Now, basically, in the whole theory of, hey, we actually trade what we do, and we don't just talk about it, we can see that EYES is here, and Nate made $8,737 on it. This is the P&L from his day. Basically, actually, let's have a look at this P&L because it's a good example of what Sterling was saying. So he's saying, hey, if you've got the right risk to reward ratio, it doesn't matter if you're wrong 50% of the time, you're still going to make money. Let's have a look. So we got 1, 2, 3, 4 losing trades, 2 winning trades in this particular account. So Nate trades multiple accounts because basically it's for availability of borrows if you want to short stocks and stuff like that. But so in this account, there's 4 losers, 2 winners, and it's green. In this account, there are 2 losers. One of them is kind of hefty. 3 winners. That account's green, 7,000, and then this is green, 9,000. Right. So, when you have a look at what the hit rate was on this particular day, and I almost guarantee that Nate would be frustrated by this trading. This would kind of upset him to have this many kind of losers, but his green 9 plus 7 plus 3, that's 19 grand, basically, right? With probably 50-50 winners and losers. Next chart, it's going to look familiar. So again, in this morning, couple of liquidity ads. Nate's bought some here, he's flipped it here, bought a little here, and cut it off here. So this isn't going to be very meaningful to you guys because Nate's been doing this for a decade. He knows how to provide and take liquidity when he sees there's an opportunity, right? But now we get into the ABCD kind of setup. A lot of volume in the morning, stocks kind of consolidating, perking up. Now ABCD setups are going to manifest in slightly different ways, and this is why you can't learn about it in half an hour with me kind of drawing something in paint. We go into, we've got a 2-hour chapter in each of our courses about long setups. So there's 4 hours in total that goes over examples, that goes over variations, that goes over how this psychological battle between the longs and the shorts and how that battle plays out and manifests in different ways, right? You see the A and then the B, and then this is probably technically the C. So he's bought a little here, bought a little here, and then this thing is really pressed, and the volume probably gave Nate some extra patience, right? Usually I'd say, hey, take some off into that the first thrust, but I would say that high level of volume is kind of saying, hey, there's some real momentum in this. There are a lot of eyes on this. This is worth hanging out for. So this is the same chart, just with a longer time frame, right? So you can see that kind of ABCD set up here. Nate traded it here. He sold some here. He's done a second sell here. But then if you look at this again as an ABCD, he's bought it up here and he's sold it down here. Up here, he's bought it up here and he's sold it higher. So this stock has gone from, you know, in one day, $1.70 to $2.90. You know, even if you're trading 200 shares of this and you're risking 20 cents a share, your risk is $40. You know, if you can make a point to the upside, that's a couple of $100, right? So we're all human. We're not perfect. We miss sometimes big pieces of moves. But the idea is, hey, if we're there for the meat of it and we've got the right reward to our risk parameters, then we're going to make money.
One thing for you guys, for you guys that, sorry I jumped in the video, just want to make a couple points. One is on those screens you see the arrows up and down. Those are not arrows that somebody adds. Those are arrows added by the platform. They can't just be put in. So I want you guys to understand that. It's not like he's just, oh, I entered here, I entered there. If you know what Dash Trader is, then you'll know that they are automatically put in based on actual orders in the market. And so obviously can't be put in. So just because I know a lot of you guys are not familiar with it, wanted to point that out.
I appreciate that. Thanks. So yeah, Dash Trader prints the arrows onto the platform as you execute the trade. So if the trade is, if you've got an order in the platform, the arrow looks unfilled, it's white, and when you fill your order, the arrow fills in based on whether it's a buy or a sell. So it'll be a white empty arrow until you fill, and then if it's a sell, it'll fill in with red. Let me go to this video. So this is a little excerpt from Tandem Trader. It's one of our training courses where basically it's all built around live trading action. So, you know, Nate follows, well, we do screen capture of Nate's screen. We take the most valuable lessons and then we show them to everyone. So
size down into that 10 break again. You can see the ABCD type setup here, curling up with that top at 990s. When it starts to break higher, you've got not only the volume, you've got the red to green move plus the 10 magnet. And remember, the more things that you can couple, an ABCD move, a red to green move, a whole number break, the more things that you can put together, the more powerful of a breakout you're going to have. And that's exactly what we had here. It was the ABCD type breakout, that 990 break for the 10 magnet plus red to green. And here we are at 1020s, the high days, and I'm out of shares because I like to take profits along the way, and many times my patience runs dry.
So that's just a little kind of idea of some of the content that we produce in terms of trying to convey information from, you know, the 1% to our membership base. So that was the ABCD pattern. Sterling, any thoughts or feedback on that?
Offhand, not really. One thing that I've had a few questions on broker. We can discuss broker towards the end a little bit. So just for you guys that have asked that question, because a lot of people have kind of said to me before this webinar that there's such a high barrier to entry with equities. And so that's why I want to address broker a little bit towards the end, because surprisingly, the barrier to entry with equities is actually no bigger than it is with Forex, and anybody can also get leverage too. So I've had that question so many times, I just wanted to throw it out there, but not on topic, so go ahead and you can jump into the next one.
Cool, yeah, we'll talk about brokers at the end. So I'm going to skim through this one quickly because I want to be respectful of your time. I've been yapping on for a little while now. So Parabolic short. So basically this setup is about a stock that we think has gone too far. Let's say the prior day's trading range is here. It makes a very aggressive move to the upside, pulls in, and then comes down. So I'm going to draw it out. So we've got stock that makes an aggressive move to the upside. Now, more experienced traders may want to play what's called the front side of the move. The reason why this stock is going from, let's say, 4 to 10, We don't really care, right? But we know because it's gone from 4 to 10, there are going to be a lot of people who are watching it and very interested in trading it. It's got a ton of volume. Maybe it's trading 1 million shares per minute. So it's super liquid. You can trade as much of it as you want. It's trading $5–10 million a minute. For a stock like this, because Nate's been doing this for a long time, he might get involved in, he's just got a very good way of, or good intuition as to being to reading points of inflection. I don't recommend this for people starting out, but when you've kind of been doing it for a decent amount of time, you can enter a trade without knowing an exact set risk. Now, what I'm going to say to that is, let's say this area here is 10, right? I'll just go into this briefly, but whole and half dollar marks, right? So let's say a lot of the people who are long here and long here and long here, they're looking for some kind of mental price target. And previously, this is busted through every level of resistance from here, here, and here, and this is just clear skies up to here. So that's why it's kind of going parabolic, right? So what do people use as signposts to say, hey, I'm going to get out? They're going to be like, oh, I'll sell it when it gets to 10, or I'll sell it, or around that area, like some kind of milestone post in the ground dollar amount that tells them, hey, yeah, that it's a good time to lock in, right? So when people lock in, it creates inventory. Inventory needs to be spread around the players, and basically it creates supply. Supply without demand makes the price go back down. What we often see is a stock perk through the whole number and then kind of just do this, and everyone who's in it is like, okay, I got my 10, now what? And then they hit the sell button and you get that pullback. If you are shorting anticipating that, let's say you're shorting anticipating that 10 is going to shove and then pull back. We call it shoving, basically. It's not dissimilar to like a stop run. It's just like it shoves through a whole number. Because of that extra inventory, as I was saying, it often pulls back quickly, and then this might be 5 minutes or something in terms of time. You'll get that sit back and you can make money from that. Now, it's not a newer style trade. Now, if you were to trade that, your risk would be if $10 claims as a bottom, then you got to be out, right? So let's say this does this, and it went all the way to 10.50, right? So 10.50, and you're like, oh man, that went a little further than I was expecting, right? So it comes back in, and it kind of does its thing, and it reclaims that 10 area. You just got to peel it off here. If $10 claims as a bottom, then you got to be out, right? So let's say this does this, and it went all the way to 10.50, right? So 10.50, and you're like, oh man, that went a little further than I was expecting, right? So it comes back in, and it kind of does its thing, and it reclaims that 10 area. You just got to peel it off here. Through these whole numbers, the stock will give you some kind of pullback 95% of the time to basically consolidate the whole number. If a stock takes a number like 10, it kind of needs to consolidate that number. Again, for more experienced traders, but we'll go into this setup. So let's say you're starting short, stock pulls in. We don't entirely want to chase it down, but what it will do is it'll perk up. So everyone who was short here, and was kind of wrong and sweating at the highs, into this pullback, they might cover up their short. Now, them covering up their short, let's say we don't have a position on this, right? So let's say we don't have a position on this stock. It comes in, and we can see this pop here are the guys who are shorting here and average way in here that are like, oh wow, it just got even, I better take it off. That emotional trade will create this pop and an opportunity for us to enter our own short. So let's say we think that entering a short here, it provides a very good risk in terms of, let's say you want to have a very tight risk, you can risk it to here, and I'll tell you why you can risk it just to this high here rather than the actual high of the day. And often you get a very quick sit back to retrace some of these gains, right? So this is where you take your profits. Now, the reason that you can risk less on this kind of trade than, like, let's say an ABCD, where you're taking it all the way to the low of the day. You know, in this case, it'd be the kind of high of the day. Is, let's say you're risking to here and you're short, and the stock starts to do this. What does this setup look like? This setup looks a lot like an ABCD pattern. Anticipating that it's going to do this, it's going to shove the high of the day, and then basically it's going to get back on all the things. Now it's at 11. Everyone's chasing it. All the shorts are covering. Anticipating that it's going to do that, you can take it off. And if it does this, it's going to the high of the day anyway, pretty much, right? So you can save yourself that money by covering up here rather than covering up with everyone else when it's doing this. That's your kind of contingency plan is, hey, your covers are here. If you want to be super relaxed about it, sure, you can have a cover up here. But the idea is that you get a nice washout and it retraces some of these gains. Now, into these washes, you've got bids waiting, and the emotional buyers, the people who bought it here thinking we're going up, they're hitting the bids and it's filling your orders, basically. So this one would be a little more complicated in terms of the psychology behind it. You know, same kind of principle. When other people are wrong or feeling pain, it might sound a little mean, but we're there to step in and, you know, create opportunities from that. So let's look at some charts. Essentially, parabolic short. So parabolic move, you know, move from 21 to 28. You know, this is before the market's even open, basically. This is pre-market trading, right? Now, you can see Nate, he did what I was talking about, where he started a little on the front side. He's added through here, and then he's added here, right? So you can see that once it cracks this level, he's averaging into his position, and he's taking profits on bids on the way down. In essence, the real, I guess, trade in this for someone who isn't quite as new, or who is more new rather, isn't quite as experienced, would be this trade here. So you've got a pop up, right? You can short it back down. You've got the risk on here. If you want to be a little more relaxed about your risk, you can do it here, and then you're covering into here, right? So, I mean, basically Nate's kind of slammed that down even further, and obviously something's kind of spooked him out about that, but he's got paid out on his risk based on these two trades, in that move is bigger than his risk up here, right? You can see actually a few different little setups in here. This is the front side, covers. This is the lower high. He's kind of slammed it again. Something spooked him out or whatever. I guess he was trading a lot of size, because if you see the P&L on it, it's quite a big position. Covered that up, and then he's traded this, which is truly the backside of the move. So if I go back to the picture, you short pops once it's confirmed that it's broken, right? The uptrend is truly broken, right? Once it cracks here, so you can short pops and cover dips once you're past this parabolic move, and the momentum is waning. We go back to here, you know, shorting pops, covering dips, shorting pops, covering dips. This day, I guess he traded around, so 23,000, I guess in total. That's how many he's kind of that have gone through his hands during this process. Here's another kind of example, right? So again, with the ABCD pattern, you know, these parabolic shorts manifest in different ways. It's not something I guess I'm going to be able to teach you about in 10 minutes, but you know, we spend a lot of energy to try and let you understand, you know, the theory behind why it works, and then show you a bunch of examples in, like, from a practical sense, to show you, you know, basically how this works. AVXL, that's another kind of example. And then again, we always put our money where our mouths are. On this day, this trade represented $4,600 for Nate. It looks like he had a few other winners on that day as well. I got a little video. One moment.
So now we're starting to retest the prior lows. Snaps that. I'm going to go ahead and start to cover up into any big washouts, at least pay myself half. Now I'm down to half size, and you can see the P&L is starting to add up quite a bit. Took another half off. I don't need to wait around to see if it goes to 38, 37, 35. Who cares? Took the rest off. $8,500 within the first hour of the day. If you want to hang around, great. It's going to probably wash out a lot more, But that's fine. I'm out, and now I'm going to be watching for the next trade.
Cool. Sterling, any kind of comments or questions about Parabolic?
No, I think you covered it pretty well. Again, I think the main point about that, when he talks about the front side or the back side of a move, is that the backside of a move is after, if you can throw up a chart, Nate, I don't know if you have one just real quick of that backside.
Yep.
But if you notice, and this is the part, this is why I think, I don't want people to think, well, how the hell do I find this when it's happening? Because here's the thing about the front side of the move is that when it starts to make that move in equities, because I know I'm going to explain some real basic points here, but in equities, even built into the platform, there's a lot of things that say or that show you what's hitting the high of the day, so you know what's moving. So you don't have to find these things in the moment. That's another reason why I say, in Forex, an actual Forex trading room, you don't necessarily need that to say trade the setup that I teach, because it just doesn't require that, because I'm looking at the euro dollar and the pound dollar for me personally. Others look at other pairs, and in other words, they can do it on their own. In equities, being in a room, it allows, and especially in the Investors Underground room, which is probably one of the largest equity trading rooms in the world, online rooms, when they have 600-700 people in there, you have people that are saying, okay, this is what's moving. So then you let it roll over, you let it define its risk, and that's the point of the setup. Is, again, same thing here as the ABCD, just a different type of formation, but the same principle of why the setup works and works so well is there, and that is it defines your risk, and it really identifies what the best, highest probability setups are on the day. So it's just, again, another one of the many that are taught. It just does a great job of defining risks so that you're entering the highest probability trades, not only the highest probability trades, but the highest probability trades with the highest reward to risk potential.
And just to, I guess, reiterate on that, these dots here, they're for the veterans, maybe shorting and covering into these pools, but this is the real setup. So, shorting this lower high, it comes down, and then the crack of this area here creates that sudden move. It's often a very violent move to the downside, like it's gonna pull back a large, like as fast as it went up, if it cracks this area, it's gonna come down, right? So, and as you can see here, let's say your trade is in this box, your risk is up to here, and cracking that, you're getting paid out 2 to 3 to 4 times on your risk, right? So that's the idea behind this. So in terms of, I guess to kind of put a bow on this, there are opportunities every day that we're trading in the community, in the chat room, but there are opportunities every day in terms of 7,000 tickers. Maybe there are 20 of them that we're very interested in, right? And each of those 20, we might narrow that down to 3 or 4, and we might trade them multiple times during the day, as you saw in previous examples, because the patterns, because those 3 or 4 have so much momentum in them, the patterns manifest as the day progresses, and they give us opportunities based on what other people are doing. Other people's mistakes are our opportunities. Other people's fear, emotion, whatever. It'll cause the stock to move in ways which we can predict, and we can trade upon that to make money. Opportunities every day. The action is very fast-paced. As I said, the average trade time will be like 5 minutes to 2 hours. 2 hours probably being on the long side, but we don't do any scalping. We're looking for moves like I showed you, where it's going from 4 to 10, and then we take it from 10 to $7.50 or something. We're not looking to scalp out at $9.90. We're looking for a meaningful move, something that is 10%, 20%, right? But the most important thing is we're getting paid out correctly on our risk. The chat room, as Sterling was saying, there are hundreds of members who are watching stocks. If you think about, like, when I wanted to watch more stocks, I bought more screens. I got a slide about that in a moment, but you've got 600, 700 people who all have, 4 to 6 screens each. They're all watching their stocks for their own reasons, right? And they come together, and it's moderated by experienced traders so that there's no kind of garbage being posted. They're letting us know, hey, this stock is trading abnormal volume. This stock is making high days. This stock from 1 week ago that Cam was watching is suddenly making a move, right? And it may have totally fallen off my radar. I might be focusing on the next 2 or 3 things that are moving from yesterday or today, right? And then suddenly one of the members is like, hey, this stock that Cam was watching last week is starting to, move. And I might be like, okay, cool. I'm going to pull that chart up, and I'm not going to base my trade on someone else's recommendation. But what I will do is trade it based on my own criteria once it's back on my radar. That's a big, I guess, it's the ethos of what we do here is teach a man to fish. We don't want to be giving out and saying, even though we do alert what we're trading and at what prices and, like if we're longing something or shorting something, we don't want people to come in and try and click buttons based on what we're doing. We don't see any longevity in that. What we want to do is help create self-sufficient traders who are independent and autonomous. And trading will bring out your own strengths and weaknesses. And you have to play to them. And my strengths, I struggle with patience. I need action, right? Well, these are my weaknesses actually, right? I struggle with patience and I need action. Sterling's strengths are that, he's very patient, very methodical. If those are my weaknesses, maybe a style like, where I'm only trading 1 time a day might not be, the best thing for my trading. So basically in trading, you've got to play to your own strengths and weaknesses. And that's why I guess, the whole follow the leader kind of thing isn't really something that we focus on here. We focus on giving people the tools to be the best traders that they can be and trying to bring everyone into the 10% by focusing on what the 1% are doing. Oh, cool. So this is Nate. He's the head trader in Investors Underground. And when we were making the DVD courses, I went to visit. It was really a cool eye-opener because, during my first US visit, I just started making some money trading. It would be considered to be great money compared to, I guess, your kind of normal peers or the people you went to school with or whatever. But when you go and, you sit in someone's house, when they've made millions of dollars trading, it kind of opens your mind to a realm of new possibilities, right? So, I went and visited a friend. He lives in Vegas. He's been trading for 20 years, and he's made tens of millions of dollars from the markets, right? And before that, I had never spent time with a millionaire, right? But I met him through the community. As I was saying, I guess there aren't a lot of circumstances in this world where super successful people are happy to share the secrets to their success for next to nothing. Investors Underground community, that whole kind of giving and sharing ethos or mantra, it really shines bright in terms of, you've got, by every definition, 1%ers in the world, making multi-millions of dollars, and they're happy to be like, at that stage, I was still a member when I traded with, this friend in Vegas. I wasn't even, I guess, a moderator of the Investors Underground community, but he knew we were chatting in the chat room. He knew I was in the States for a little while, and he's like, "Hey Cam, come and we'll trade." And he liked to play cards, so went to the casinos, played some cards. Basically, you find colleagues because trading can be a very lonely thing. You're sitting there with your monitors. You've got no one to really experience the ups and downs with, right? So the community that we built, not only is it about information sharing, networking, but everyone is your colleague. Everyone, you can learn from everyone in there. So that's, I guess, that's the big focus of what we're doing. More screens. Yeah, this is my setup back in Sydney. So I think I've got 12 of these things now, 12 of these screens. I've got a set of them at my parents' place in case I go over there for dinner and have to trade after. I got a set of them at my apartment in Sydney, and then I got a set of them in the Bahamas. So I've assembled these too many times, but everyone trades with different kind of setups. My first setup, I think I showed you on one of the first slides. Cool. Sterling, any questions?
So you're done with your slides, Cam?
Yeah,
Okay.
I'm all good.
All right. Couple things. While Cam was talking, I made because I repeatedly get the question on broker. What I did is I created a page. If somebody wants information on the broker, I'll pop that page in the chat here in a second. And you can just enter your email. I'll just send you the information on the broker. You'll get that. But that's a side note here in a second. But so the other question I had was, how do you scan for stocks? Do you want to briefly go over something like maybe FinViz or whatever you use?
Yeah. The first thing I'll do when I'm scanning is let Nate do the work for me. So every day we put out a watch list where we condense what our ideas are for the next trading day based on what's been happening and what's been working. Nate goes through, I'll pull up a FinViz, for example. So in terms of like scanners, so what Nate, and we talk about, we got 2 chapters that go over the way that we scan for stocks, right? So we kind of go into it for a couple of hours, but basically what the parameters are: higher than normal range, higher than normal volume, and basically we look for that on the upside. Then we look at that for the downside. So the upside are things that, like, let's say a stock's gone from $1 to $3, for example. We might be looking at this for a short. A stock that's gone, this one here has gone from $8 down to $4. We might be looking for like an emotional washout on this to bounce it. Basically, I mean, it's probably impossible to go through the specifics of like the parameters in terms of what we're looking for, but to kind of condense it, I'd say more than a 20% move in the last week, more than double the average volume, and then like a factor of like 2 on the average true range or something like that. So we're just basically looking for stuff that is moving and is moving and has eyes on it. If you have a look, through the scan, we're looking at stocks that have big ranges and abnormal volume, right? So there's VRX, nothing all year, and then someone came out and said, hey, this company is a fraud. We don't really care what they came out and said, but look at all the volume here. So now people are interested in trading this. It's losing its range though, so this isn't something I'm super interested in. This one's a little more interesting. It's got range and lots of volume. So basically I'm going to go through these and I'm going to pick out which ones I really like, and they'll be there are usually 10 to 15 on this page, and I'm going to pick out 5 I like, and they'll be the ones that are front and center on my trading screens in the morning tomorrow. That's, I guess, how we scan. So volatility, higher than average volume, and a few baseline parameters such as we don't care about stocks that have less than 100,000 shares volume, that are less than $1 really. Sterling, anything else?
One thing that I thought was, this was kind of for me, it's a metric that I think you should judge anything by, and that is, so many times people focus on the educator and exactly how profitable they are. Now that's important, and one thing in the room you'll see, you'll see Nate post huge size and again backs up like what Cam was saying about proving profitability. But one thing that to me that really impressed what the Investors Underground room and whole education does is, like, for example, if Cam was to just quickly go to the YouTube page, you'd see videos of a 23-year-old guy named Derek that took a $5,000 account to $700,000 in a year. You'd see another young guy that did a couple $100,000 in a year, and then in the room where you're talking with people relaying their messages, you just see so much success in that room. To me, that's one of the bigger metrics, at least when I look at something, because it's one thing for for Nate to do something, but the question is, can it be taught? You know, is it possible to take this and actually teach somebody how to do it? And you see so much success in the room. There's another one, Elkwood in the room, huge success
Right. So,
doing, you know,
yeah.
if I remember, he's done well over seven figures.
Yeah, like I mean, this is did he post that? Oh, that was a couple of weeks ago, I guess, right? But you know, he's taken a photo of his P&L that day. He's traded one, two, three Teslas here in two different accounts. One, two, three, four, five, six, seven tickers in that day. He's had a loser here. He's had a loser here. You put 2 and 4 and 40 together, and you know, there's 46 grand there, right? And that's the stakes that these guys play. These aren't the stakes that I'm super comfortable with. You know, I'm happy in the four-figure kind of range. As I stray into the five-figure range, I start to sweat it out a little too much. But that's just my comfort level, you know. But you know, Eric started with us Investors Underground, and his kind of way of making money previously was you know, he flipped houses, right? That was his thing. So he had no experience trading stocks, but he didn't want that 9 to 5 thing, right? So previously, you know, he'd do the whole like real estate thing, do up properties, renovate, sell them, whatever. And then, you know, coming into 2008, he felt that that market there was a lot of risk there, exited at a pretty good time and started learning how to trade, you know. So I guess, yeah, you know, what Sterling's saying is it's really, I mean, it's really positive and rewarding actually to see these guys, you know, learn from what, you know, we're doing and what the other members who are the 1% are doing, and get a lot of value out of it, you know, learn a skill that can make them money.
Yeah, that was. I just wanted to mention that real quick because that was one of the things that initially really impressed me is just seeing the success in these guys, and not, you know, I'm not talking, a lot of these guys are not doing six figures necessarily in a year, but you have guys that went from nothing to, you know, maybe doing 30, 40, 50 as a real common, you know, 30, 40, $50,000 in a year, which as a trader is nothing to, you know, nothing to scoff at, especially for a lot of these guys that just started and maybe started out with a $3, $4, $5,000 account. So that was kind of about a year and a half ago when I first saw Investors Underground. That was one of the things that for me personally really impressed me. And you know, all these guys, again, they throw what they're doing out there. They prove it. They don't just say they're doing it. They're, you know, they're not Monday morning quarterbacks. They're showing what they're doing, and that's the again, one of the parts that really impressed me. So
Eric is obviously a very proud grandfather. Let me see if he's got some more
he
P&Ls.
also posts a lot of golf pictures.
Yeah, so here's like another example of a day, you know, so he's got a losing trade here, the rest green, you know, and he's posting these very regularly,
And
right?
that was 96,000 right there. Another 38. I mean, just
He's got a
huge
loser
numbers.
here, so I mean, he's not afraid to post the losers either, right?
That's a big
So,
loser.
you know, he had a big drawdown on this, right? But you know, he'll back that up with a $70,000 or $80,000 day the next day, you know. So yeah, I mean, I guess the thought process behind, you know, the whole community is everyone takes away from each other. Even though this year Eric might be making more than Nate, it's not about, I guess, how much money, but it's about, hey, what can we learn from each other, you know? And Nate might be like, hey, Eric, this is working really well in the market at the moment. And Eric might be like, hey, I didn't realize that. Or Eric might be like, hey, you know, I've found that this pattern's working well, or these groups of stocks are trading, you know, very predictably. And, you know, everyone's working with each other to try and help each other make money, which is kind of the opposite in the rest of the world because everyone's fighting over the promotion and stuff like that. So getting out of that competitive environment and getting into a nurturing environment is, you know, that's been a big shift in, I guess, mentality for me. But you know, it doesn't happen everywhere in the world, but you know, for some reason it happens really well in the community. So I guess you know, Sterling and I were chatting about what the best way would be to help you guys out accessing the community. Sterling demanded a certain discounted pricing, and
I was nice about
well,
it at least. And a lot of times people hear this, they're like, "Oh yes, his lowest price." I would urge you guys to check on this to verify it because I think, as you guys know, if I say something, it's not. I don't just say something that not be accurate. If I'm gonna put my reputation on the line, it's accurate. So I'd urge you to verify this if you have an interest in equities. But anyways, sorry to interrupt you.
that's cool. So basically, we put together some pricing for him that is lower than anything that you'll find online. It's lower than the rates that any of our members who are currently paying for subscriptions. It's lower than that, basically. Let me pull up the prices. So I'm going to go to, we created, I guess, a special page for you on the site, and I'll go side by side with the online pricing as well. So this is the online pricing, basically. It's normally a couple of hundred a month for standard membership, 300 a month for elite. But then you get discounts if you go for a longer term membership. And I guess the way that we look at that is that you can't really learn anything in a month. There's nothing that you can achieve really in a month's time apart from getting a taste for something, right? But you know, what we see is members who have longer term kind of outlooks, you know, if they're saying, hey, I'm going to give this 6 months, 9 months to properly give myself a foundation, educate myself in what, you know, everyone's doing and where I fit into all that, those are the people who have the most success. So we like to reward, I guess, a longer term perspective with discounted pricing. A normal annual membership of Elite is $18.97, and then a DVD bundle is usually $10.97, and then this is the first course. So this is like a beginner to intermediate course. This is intermediate to advanced. So these are $597 and $697 respectively. These are the deals that we set up for Sterling. So basically, we've got, I guess, a kind of get your feet wet deal. This is for the first course that we created and 1 month of the Elite package. So that gets you the chat room where everyone's kind of discussing ideas. This is where you can private message the mods. This is where, you know, we're watching what stocks are moving and all that kind of stuff. You've got the daily watch list, which I've showed you. You've got a handful of webinars a month. We say bi-weekly, so we say 2 a month, but really we do around 4 a month. And basically this is where after you've been through the courses, you know, you're gonna find, you know, let's say you've been through the courses and you've been trading for a couple of months and you're seeing some success, but you know, you've got a sticking point that is kind of holding you back from, you know, making the money that you're hoping to make, right? Going through these sticking points is really a great thing about the webinars. So this is where, you know, you're going to be able to ask Nate, hey Nate, you know, I saw you enter a trade on Tuesday. I didn't quite understand the setup. I've been finding on that setup that, you know, I've really been struggling with it. You know, why did you enter it and what are your thoughts about what I'm trying to do? And Nate's going to go through with video, audio, and answer the questions to the best of his ability, right? And then a couple of extra videos, just because people prefer to watch videos than read through scans and blogs and stuff like that. These are kind of recap videos. So let's say we have day trading that we were very active. We'll go through and be like, hey, look, we traded these 5 tickers. This worked. This is something that we could have improved on. Here's our thoughts for tomorrow. And, you know, it's kind of a debrief session with Nate or one of the other moderators where, you know, you get to hear a little bit about how they felt about, you know, that trading day and what their key takeaways from it were. That's what the, I guess, the Elite membership is. So this package is the first course and 1 month. This second package is the first course, which is the kind of schoolroom approach in terms of lessons. The second one is that live trading course that I showed you the snippets from, where you get to see the stocks move around with Nate's commentary over the top, with the positions ticking around, you know, and the P&L moving. And so that's both of these plus 3 months access, and that's $10.97. And then this one is kind of the Rolls Royce in terms of you get 1 year instead of 3 months. And when you compare it to the pricing that I had up earlier, we're charging $10.97 for that DVD bundle, and that's the discounted bundle price for both of them. Then if you buy a whole year of Investors Underground Elite, it's going to be $18.97. At $19.97, it is a considerable discount, and I've committed this pricing to sterling until Eastern time or close of business. I think it's Eastern time, midnight on Friday. So just like, I guess, day trading Forex Live discount for the Momo book, we pull these discounts down because we don't want them kind of circulating around on the internet. We're pulling down the DTFL promo code for the Momo Traders book because it's showing up on Google now, and basically these are literally exclusive deals. There's no point in having an exclusive deal if someone can go on Google and get that deal. I think midnight Friday Eastern time, we'll pull them down, but it's a great opportunity for people to be able to get on board at a discounted rate and start learning from the 1%ers in the community. It's such a rare opportunity that you get to get inside the minds of people who are extremely talented at their craft, that we kind of see the membership price as a paywall to filter out the people who are serious about it or not. So sterling, that's the deal.
Anyways, as far as the discounts go, these guys, you don't get 700 people in a room paying you. Most of the other people are paying thousands of dollars a year. You don't get that many people in a room, 700 people. I think, what do you guys have, 1,500 members? I say 700 people because that's normally what's in the room, but they have around 1,500 or more members. And the point is, you don't get that type of just loyal following unless you are absolutely delivering. So, I just stress the point that, and you can look all this stuff up. Their YouTube videos and things like that. They have a lot of quality content out there, but you don't get that following unless you're really delivering the content and delivering it in a way where people are taking the information and profiting from it. So for me to even recommend something, if you guys know, as I mentioned at the beginning, in 6 years, it's the first or second thing I've ever recommended in 6 years, because quite frankly, there's not a lot of good stuff out there. And this is one of the things that I found personally that I just really liked, and especially for those of you that are trading the DTFL based setup. We have a lot of time on our hands, and that's one of the nice things about this, is that it allows you to fill that time in between DTFL based setups to look at something else, to find other opportunities. Or on the other token, some of you don't like Forex, some of you like equities, or both, or whatever, but it's another avenue, whether it's a sole avenue towards trading or whether it's a joint effort between Forex and equities. These guys are the real deal, and they have the following they have for a reason, because they deliver on what they say they're going to deliver.
Cool. Well, I really appreciate those kind words, Sterling. So, yeah, we're going to leave this page up, and
I'll give you guys the link here.
Yeah.
So what I'll do, and then also for anybody that's registered, I'm going to also send you the recording of this, and you'll get the link for that as well. So I will do that as quickly as I can. But right now in your chat, I will send everybody the link to the coupon code, or the discounted page.
Yeah, www.investorsunderground.com/DTFL.
Should be good to go. Are there any pressing questions that you guys want answered before we head out? Otherwise, unless Cam has anything he wants to say, we can wrap
Sterling,
it up.
you're going to create, you created a question box or something for brokers, right?
What I did is I created a page for you guys, so you also should get a page. I'm going to send you guys some information on the broker that I like, that I use, that gives you the lowest barrier to entry. They have a $500 account minimum, which I don't really recommend just funding it with $500. I recommend a little over that at least, so you can maintain over their barrier. But the point is, they allow 6-to-1 leverage, and they also allow U.S. traders, and they do not. You're not stuck with the pattern day trader rule. So in the U.S., if you have under $25,000 in your account, you can only place 3 round-trip trades in a 5-day period. I believe it's 5-day period. So this broker allows you around that rule, so you're unlimited. You could place 1,000 trades in a day if you wanted to, and I will also repost that link right now. All right, well, really appreciate Cam you spending the time to get the slides and stuff together. I know that that took a fair bit, so I appreciate it personally. I'm sure everybody else does as well. That's going to wrap it up for us. Thanks for joining, guys. I appreciate it. Appreciate you taking your time. I know you could be doing a lot of other things with your time, so I appreciate the fact that you value the information we brought enough to show up and stick around. Hopefully I'll see you in either DTFL or the Investors Underground room, because I'm generally in the Investors Underground room most days, so if you see me in there, you'll see DTFL as a member, and shoot me a message if you like. So that will do it for me.
Nice one.
Have a good one. Thanks again, Cam.
Thank you so much, guys. Cheers.